Indian markets in the month of May have lost about 6%. That makes May the worst performing month for the year. For the day, however, we saw a lot of back and forth action. Markets recovered despite a shocking drop in GDP data. The hallmark of today's price action was not the intraday drop, but intraday volatility. I guess the reason why volatility was so high today was largely on account of FNO expiry. Let's look at the intraday graph for the Sensex and for the Nifty just to establish where benchmark indices have shut shop for the day. That's Nifty for you, 49.24, and Sensex down 93 points. Some key pointers for market and for market activity for the day gone by. The Nifty is now down 6% for the month of May. Auto index was the biggest loser today, and mid and small cap indices today have closed in the green. Suzlon was the top traded counter on both the exchanges, even though the price action there was on the downside. Factors which impacted trade today, but of course it has to be GDP. Then we saw strong institutional selling in auto stocks. That's a function of two things. Number one, auto sales for the month of May are due tomorrow, and then there are some early murmurs that this time around we may get monsoon which could be below average. Also, Cabinet finally and thankfully has approved the National Telecom Policy, and then in the last half an hour of trade we saw some short covering in some banking stocks. So what's the best way to trade and make money in an otherwise no return market for the bulls? Thoughts on that from two experts, Mehrbun Irani and Ashwini Gujral. Ashwini, Mehrbun, gentlemen, good evening to you. Thank you for joining us. Ashwini, thank God it's over. The month of May and the May series is over. What should we anticipate and expect for the month of June?
Well, June could trouble you more than May did, because in May if you went short at higher levels, the market did the rest. In June, you may have several days where, you may have bad news, but the market may decide to move higher. That's called a consolidation. That doesn't mean that we'll suddenly start outperforming. It just means that once you sell down something enough, it tends to move sideways. On certain days it moves up when it should move down, etc. But overall the sense is to stay short on rallies, but have realistic profit targets of about 4750, 4800 on the downside, because unless something drastic happens, I don't see us breaking this 4800, 5000 band in a hurry. Similarly, on the Bank Nifty, 9000 to about 9600 seems to be the range. And at lower levels like we saw today, you'll get to see short covering whenever bad news is announced, because a lot of the market is already positioned for a meltdown. So chances are once we are done with our sideways move, we should continue on the downtrend.
Mehrbun, globally and locally, I guess we are getting twisted from all the ends. So how does one invest and make money in this new no-return world?
I think it's true, Nikunj. Besides the May factor, which many people state that you should sell off in May and just go away, sell off before May. I think what is dogging the market sentiment is basically the spate of bad news which is going on, continuously coming. I think news on Japan came, then it was Greece, then it is Italy, Spain. I think there's no doubt of bad news coming from Europe. But the problem is, unlike 2008-9, where we were blaming the US, Lehman Brothers and other crises for what was happening, I think somewhere we didn't accept the fact that the macros as far as India goes is somewhere going for a toss. I think GDP numbers which got announced today is one more stamp on the fact that India has slowed down considerably, and India possibly is not getting counted in the world right now. What should investors do? I somehow feel that the ultimate bottom for the market will come when we will have a painful or a very painful solution to the European problems, which I am quite confident will come in 2012 itself. So what should one do? Wait for that thing to happen? Because I personally feel the markets could possibly bottom out just before that event. So I think I am a buyer in the market today, Nikunj, if you ask me, even from an investment angle and from a trading angle. I think people should go out and buy selectively into stocks, especially the large cap stocks, where you will have that leverage on you to possibly learn to sell as and when the market bounces and bring down your cost of holding. So asset allocation, according to me, as far as stock market goes, is very important right now.
So the question we are asking on this edition of Markets Tomorrow is, why did Indian markets recover despite the GDP shocker? Mehrboob, do you want to react to the question of the day?
Honestly, Nikunj, this 5.3, 5.4, 5.5, 5.8 honestly doesn't make any difference. We all know that India has slowed down. Besides some politicians and some bureaucrats, everybody was openly looking to the fact and accepting the fact that India was slowing down. This was one more reason to feel down. Okay, fine, but so what? The bad news is continuously coming. Whether it is 5.7 or 5.8, I think the disappointment would have been the same. So at the end of it all, people are just wanting to walk right now because people are accepting the fact that most of the negatives are now getting discounted, while the fact remains that there are not too many sectors where one can look at from a buying angle. And the sectors which you like, the stocks which you like, considering the market is always supreme, the market has already given it the right valuation. So that is the problem in the market today. But as far as the GDP numbers go, there was some disappointment early on. There could have been short covering the last 1 hour. I'm not saying no. But at the end of it all, I don't think a 5.3 or a 5.8 would have been too much of a difference as far as the way the mind of a market man works.
Okay, some other stocks which captured all the headlines today. Hindalco saw pop largely on account of approval, and in principle the government group of ministers now has approved the Mahan Coalfield. JP Associates, even though the company came out with disappointing set of numbers, the stock appreciated. Is JP Associates making a base? We'll discuss that. And then SpiceJet, a horrible set of numbers for FY12. Sales have plunged and loss has expanded. Auto stocks today have corrected. Tata Motors now in quick time has retreated from levels of 280 to levels of sub 240. Bajaj Auto looks like it's a bottomless pit for Bajaj Auto, and not such a strong day for Hero Moto as well. Some smart gainers largely from the consumption space. So we had Page Industries and then Asian Paints. Telecom stocks, I would say it was a mixed day for telecom stocks. Bharti, Arcom and Idea. Check on Arcom, flat. Idea was down and Bharti was flat. And today Bharti shut shop at 302, 302.5 if you want me to be precise. Ashwini, what do you make of the decline in autos?
Well, like all sectors which go up, autos went up, consumption was strong. Today, we've seen even consumption is now beginning to turn weak. So, slowly each sector will give way. I mean, autos is a cyclical business, and once everybody has bought their cars, generally autos tend to slow down, and Tata Motors was a trigger. Maruti had already started declining several months back. Mahindra was also around its lower level of its range. So I think autos was a decline that was waiting to happen, and I think like everything else, autos will also bottom out. These stocks will bottom out much before the companies start showing growth again. So maybe Tata Motors will get back to those 180, 190 kind of levels before it bottoms out. Maruti will hang around in this 1050, 1100 type of band. Similarly, two-wheelers also are showing clear signs of slowdown. So Bajaj Auto will get back towards 1350, 1400. Hero Honda around 1650, 1700. So there is some downside in auto stocks.
Mehrboob, 330 or 340, the recent high for Tata Motors was certainly not the right price or right level for Tata Motors, and neither is the current price, which is 230. What to your mind is the correct price for Tata Motors?
I think, Nikunj, let me admit one thing. That the day the numbers were announced, if you had asked me, I would have said I would have been a buyer in Tata Motors around 7-8% lower than the price, which would have been made at around 245, 250. Today is 235. Should I buy into it? Answer is yes. Can it fall further? Answer is yes. But at 235, I'm ready to lose 10-15 rupees if I'm an investor. I may also end up seeing a 280, 300 coming over the next 12 months. And that is a good return of 20, 25, 30%. So that's the way you should be looking at the market. You like Tata Motors. The problem is with Tata Motors was 10 out of 10 fund managers and 10 out of 10 research houses were liking Tata Motors.
So it's an overowned stock.
It was an overowned stock, and then you had a problem with the margins as far as JLR goes. The margin which people have anticipated in 2012-13 in their projections, I think people are now doubting it. And 90% of the consolidated net profit of Tata Motors comes from JLR.
So Mehrboon, at a time when China is threatening to slow down, isn't it too naive to go and buy Tata Motors, because Tata Motors still derives 80% of its profits from JLR, and for JLR 30% contribution is coming from China?
Yeah, the contribution from China has gone up. I would have taken it as a positive, Nikunj. Okay, if I start looking at things from your angle, maybe yes. But at the end of it all, I think we will need to look at Europe. If Europe slows down further, the tremors continue for some more months, yes, it could have an impact. But at the end of it all, when the stock reacts sharply, and you said 350, I'm saying even if it's 300 rupees, 300 becoming 230, somewhere around the line 25% correction already taking place, I think most of the negatives are getting built into the price. So like everybody was positive on Tata Motors, people are suddenly becoming skeptical for absolutely the opposite reasons.
Two stocks I want to discuss at length. Mehrboon, let's start with Asian Paints. I know you track that stock. It's been a great money maker for investors. But at these levels, Asian Paints, based on FY13 estimates, is trading at what, 34 times?
Yeah, true. There is a price at which you buy a stock if you want to make money out of it. I think Asian Paints, yes, I have been liking it for quite some time. Why should an investor do at the present price of 3,950? Honestly, you are right, Nikunj. I think it's become expensive. While giving marks to Asian Paints management as well as the company as well as its products, the fact is volumes have kept on going up. The company has got pricing power. Can the company face problem because of rupee depreciation, because it depends on imports? I think they have got the pricing power I mentioned. But at 4,000, 3,950, the stock honestly is looking very expensive, Nikunj. If there is any other alternative a person can have in this segment called consumption, possibly you can switch
what are the other options?
And wait for a better price. The options could be possibly between a Colgate or between a Dabur India, which also would be looking a little bit expensive. I'm not saying no, Nikunj. But the fact of the case is investors need to hide themselves somewhere. And Asian Paints is an ideal pick. And if you look at all these names which I mentioned, be it Asian Paints, be it Colgate, be it Dabur, I think the biggest point in favor of them is they don't come out with a dilution of the equity so easily. And investors who are invested don't like to sell their shares in a hurry, because these are the shares who are giving them a super compounded return over the last many years.
They are known as the great compounding machines. Let's discuss Reliance. Ashwini, what do you make of today's price action in Reliance? It shot up on decent volumes in the last half an hour of trade.
Well, if you want to make the market close higher than 4,900, I think that's the best way of doing it. I think today's action should be at best ignored, because short covering can make things look more spectacular than they are otherwise. I think Reliance needs to cross overhead resistance around 723 to about 725 before you really start rewriting the charts here. I think it's been in this 680 to about 720 type of zone. So nothing significant about it. It generally happens on expiry days. In oversold markets, Reliance tends to move up and hence takes the Nifty up with it.
Auto sale estimates, they'll just come up on your screen. The most interesting comparison, but of course, has to be between Bajaj Auto and Hero MotoCorp, and then what Maruti has done in terms of market share gain and in terms of total export or total dispatch numbers when it comes to the global business. Mehrboon, is it a good time to be a contra buyer in Maruti?
No, I don't think so, Nikunj.
Why is that?
I think valuation, but I'm not very comfortable. Also, the fact of the case is, if you look at the currency, the yen part, I think not many are able to comprehend right now. So I think there are risks attached as far as Maruti goes.
Ashwini, you have a reverse or a different thought on Maruti. You are of the view that Maruti is now making a base and the risk-reward ratio is in favor of going long.
The risk-reward is in favor of going long if you are a very, very long-term type investor. What I had said was that Maruti will find it difficult to go below 1100, because there is lots of support in this 1050-1100 zone, and chances are that at best it may be able to rally from here in a good market. At worst, it will move into this 1050 to about 1150 type of range for a while. But obviously, if auto sector is going down, 8-10% in a month, I don't think Maruti can be expected to move up in that situation. But whenever autos start bouncing back, chances are Maruti would be probably one of the outperformers.